Okay, cool.
The broadcast is now starting. All attendees are in listen-only mode.
Well, hello. There I am, Alec Hogg, coming to you from London, a pretty chilly London, although I was just showing off with my colleague, Stuart Lohman, who's our managing editor at Biznews, a minute ago, and I turned the computer. I can show you. There we go. Let's have a look at that. That's what it looks like outside here. The sun is shining in London. However, I don't really want to tell you too much about what kind of weather we've got, because it's 6 degrees. Now in South Africa, I remember in Joburg, we would have 6 degrees maybe a couple of times a year, Stu.
No, for sure. I'm not sure. It's a very low number. I don't even think we get that in Joburg unless it's the middle of the night, Alec, in winter.
Anyway, well, you see the sacrifices that one makes. But anyway, it's I needed to also just show you one last thing before we go into our portfolio today. Those of you who've been following the portfolio for a while will recall that I've been trying for a period of time to get my Amazon delivery delivered to me. This is the Amazon is not so, they're very good at small stuff, but they're not so good at big stuff. But since August last week, look at what arrived, my new bookcase. So just to let you know, oh, there in the top, of course, oh, hands off, that's my daughter. But there in the top is the Alexa, the very famous, she's coming onto the screen. We won't, Alexa, stop.
Sorry, I don't know that one.
Anyway, just to show you what the famous Alexa is, one of those benefits of Amazon.com, which of course is the biggest share in our portfolio. But enough of that jibber jabber. Stuart, do you want to just tell us or make sure everybody's able to hear?
Yes, thanks, Alec. I've already got a comment from Margaret. She says, Cape Town is windy, so you don't have that, I don't think. So, I've got a few hands, so I think everyone can listen and see you. Just a quick one on questions. As those of you who've been following us know, there's a little control panel on the right-hand side, and a little questions drop-down menu. If you push something through there, the questions, I'll pass them on to Alec as we go through the conversation. Very interactive, so please just throw them as they come to you.
Yeah, I think that's pretty important, isn't it, Stu, that we want to keep this as interactive as possible. So whenever there is an opportunity to break into the broadcast or into the webcast, Stuart will do that. We've been doing this now for 3 years with Standard Bank's Web Trader, and we look forward to spending the next around about an hour or so with you. It's a good idea to get those questions through pretty quickly or early on, because we do tend to run out of time towards the end. Sometimes we can't get around to all of the questions. This time, though, I'm going to do something a little different. Usually, every month, I will go through each of their stocks and tell you a little bit more about how the stock performed, etc. But I want to try and make it more interesting. And the way of making it more interesting, I think, is by giving you a broader overview. And what happened in the past month, there were 3 things really that went on. The one was we've had the reporting season, so we've had quarterly results from all of the companies now in the portfolio. I'll highlight some of those a little later. The second thing is there's more of the debate between, are the tech stocks now, have they overreached? And as you'll see, in fact, let's go into that. Our portfolio in the last 3 years is up 66%. But if you can have a look, this is in US dollars, by the way, but if you have a look at the individual performances, you'll see that Amazon has gone from $327 a share, or $328 a share when we bought it in December 2014, and is now sitting at, in fact, it got through $1,200 a share very briefly this week. I know, I'm a shareholder, and I know you are too, but that's just an incredible performance. The gain in US dollars, 265%. Just to let you know, those of you who might have only been coming in here for the first time to this portfolio, one of our stories is that we believe that the South African economy is being very poorly managed. There are indications that things are changing for the better, but nothing yet that isn't already reflected in the weaker rand. So once we see some dramatic increases in the value of the rand, then we can reassess that. But as far as I'm concerned, for the moment anyway, the South African rand is in a declining trend. So what the idea was in 2014, to take money offshore, invest offshore, and then to put it into global stocks. Now, that doesn't mean that necessarily you have to get in an aeroplane and fly to London to find a bank account here. That in itself is quite a challenge, I'll have you know. But it does through Standard Bank Web Trader, who launched Web Trader in late 2014. We then got together with them. You're able to buy or sell stocks in many stock exchanges around the world. And that's really where this whole portfolio began. I have my own money invested, so you are sure that I'm paying attention to everything that's happening on these stocks as they go through the month. So the one big story then, of course, was the quarterly results. I'll talk to that a little bit. The other big story is this fight, this belief by some that tech stocks are overdone, and others who don't believe that that is true. And then thirdly is a story about bubbles. So those are the three issues that I'm going to touch on today. And of course, we'll take questions. I think we'll have quite a cool hour quite a cool time over the next 60 minutes. Of course, whenever your questions are through, Stuart will pick them up, interrupt me as you are ready to do, no doubt. Now, Stuart, and we'll play with those as we go along.
Yes, thanks, Alec. Got a few questions. First one on Tesla from Des van Us. He says it's got huge debt and is burning through cash monthly. I struggle to understand why it's a good holding as other car makers are better capitalized and also entering this market.
Des, I'm glad you asked that, because that gives me the opportunity to go into the second of our big themes, or the big themes at the moment, and that is this argument about tech stocks. Now, I'll refer you, just have a look at this on your screen. If you look at Amazon.com and Alphabet as two examples there, both of those for many, many years lost money. In fact, Amazon.com has only recently started to allow profits to be shown in its balance sheet. These are exponential companies. These are companies who are going to be growing at a significantly strong rate. Just to give you an example, in the most recent reporting season, it was expected that the tech stocks generally would show about 11% growth year on year in their sales. They came out with growth of 22%. So they would double what the best analysts on Wall Street thought they were going to do. Just put that, park that on one side. Those tech stocks are essentially what we call exponential companies. And mankind, human beings, are not very good at understanding exponentiality. You almost have to take a leap of faith, do a bit of analysis, understand what exponentiality is, and then bring out your Excel spreadsheet and put in growth of 20-25% a year. And a good example, many examples of this. But if you go back to Warren Buffett, when he started off his investing, he's achieved about just under 20% a year since 1965. And it has taken a small, relatively modest investment to be worth a ridiculous sum, hundreds of millions of dollars from a couple of $1,000s that you could have started with. That's the reality of what happens in what is called the eighth wonder of the world, which is compound interest. Now, if you're growing exponentially, like Amazon, like Alphabet, like Tencent, like Facebook, and like Tesla, then the impact of this is very difficult to calculate if you're working in a linear world. So you've got to take off your linear hat to start off with. Getting back to the, and that is something that investment analysts find incredibly difficult to do. And that is something that value investors find impossible to do. And as a consequence of that, they miss out and have been missing out on this enormous boom. Amazon, for instance, is an example, which is one of the top 5 market cap stocks in the world, only until recently rated 18th hold, the 18th biggest stock held in share portfolios by US fund managers, by US money managers, because they didn't believe exponentiality. They don't believe the story. The other thing with Tesla, of course, remember, it has no legacy, just like Amazon has no legacy when it comes to retailing. Amazon went into retailing with a clean slate. It had no stores that it needed to close down. In fact, it's been opening a few stores now, a few, but it didn't have the legacy that it needed to shed. And as a consequence, it could do everything differently, everything online, and you see the consequence of it. Tesla has exactly the same situation. It has no internal combustion engine legacy. It has no people on its staff who believe in the internal combustion engine. It has no concrete to shift. And believe me, anyone who's worked in a big corporation, I spent 2.5 years at ABSA, that concrete layer is incredibly difficult to move along. Most human beings don't like change. And if you're coming in and you just happen to have the legacy, it's very, very difficult to move that along. So we look at the big car manufacturers, the existing ones, and we see that their market capitalization is less than Tesla. Why is that the case? General Motors, which produces 1,000 times as many cars as Tesla produces, why would that be the case? Well, the case there is General Motors is producing internal combustion engines. It's got an internal combustion engine view, and the internal combustion engine is dying. If you like, go back 100 years and think about the companies at that time who were making buggies. They found really nice, smart wheels. They would varnish the wheels. They would varnish the wood, put in better upholstery. But that's all they could do when the motor vehicle came along, when the internal combustion engine came along. That's exactly what Tesla is doing now. When Elon Musk last month introduced the last big frontier, which was, well, electric cars, they don't go for very far, and actually they don't go very fast. He brought out the new Tesla Roadster, which is the fastest car ever invented. It goes from 0 to 100 miles an hour in under 2 seconds, faster than any internal combustion engine has ever been able to do. And it can travel for something like 1,000 miles on the battery. Those are the realities of what's happening. You've got to understand the exponentiality and the new world and the fourth industrial revolution. All of these things, you have to put on a different set of glasses. I've had the privilege of going to the World Economic Forum in Davos for the last 14 years. I don't go there to hobnob with people. I go there to learn. I go there to open my eyes, open my ears, and to listen to the trends of the future. They're very good at doing that at the World Economic Forum. And the trends of the future get extrapolated back into what is happening in the world today, where the winners are going. Amazon, think of this company. It's been around since the mid-1990s. It is a huge business today. In the last quarter, in the quarter that's just gone in September, it produced a 34% growth in its sales. 34%. Now you go back and have a look at its competitors, the retail competitors. If they can do that in 3 years, they're happy. In fact, in 4 years, they'll be very happy. Amazon did it in a quarter, 34%. That's the incredible story of exponentiality. You rub the sleep out of your eyes and you think, all of a sudden, what have I been missing? Why is Amazon doing so well? Well, not only on the retailing side, and when you live in a country like the UK, literally you can order anything you want from Amazon. You put into your browser what it is that you need. Last night, Jeanette she's going to be selling some stuff on some products made in South Africa, in fact, on a Christmas market, and the people who organize the market say she needs a gazebo. My heavens, I mean, where do you get a gazebo from? Put it into Amazon.com, gazebo, and up come many, many options, and it'll be delivered today. We put it in last night, sorry, the 30th, not today, the day after tomorrow, but it'll be delivered well in front of the period that she needs it by. I don't know where it's coming from, could be from the other end of the world, as far as we know, but that's the Amazon model. You get it quickly, you get it cheaply, and you get what you want. And it is an infinite number of products. Now, how can you compare that with a company that has got bricks and mortar, lots of staff who are trying to serve you in the day? It's just incomparable. A similar story in the quarterly results that came out, and a company we know very well, Microsoft. You'll see it in the portfolio there as well. Microsoft, by the way, after Amazon's results, the share price went up 13%, 13% in one day, bang. Microsoft is a company that's moving aggressively into the cloud space, as is Amazon, by the way. What is cloud? Cloud is, if you recall, as companies, what we used to do was we would buy computers with hard drives. When I started my very first publishing business in the 1980s, I was terribly proud of the fact that I had a hard drive of 10 megabytes, an IBM machine with a 10 megabyte hard drive. Can you imagine trying to do anything with 10 megabytes today? That is, those hard drives, of course, got better and better, and eventually you got to a terabit of hard drive. Now you don't need a hard drive anymore. because all of that goes into the cloud. And in South Africa, where we're still battling a little bit with bandwidth, and we don't quite trust that the bandwidth will always be available, it's hard to get your head around this as well. In the Western world, in first world countries, the cloud rules. You do not need a hard drive. You don't need external hard drives. You can buy space very, very cheaply. I think I get a bill every month from Amazon for $2.98 or something for almost infinite amount of space that I can put onto Amazon Web Services. And this is what is happening. So now think about that as another structure, where the structural change from the internal combustion engine, which is dying, which is going to be phased out because of climate change and all kinds of other issues. And in future, we'll only have electric cars. And then you think about hard drives and computers. And in future, you don't need those hard drives because it all goes into the cloud. So the people who are offering the cloud, and Felicity wrote about this on Biznews Premium I think it was last week, about Amazon, Microsoft, and Alphabet, the three winners in the cloud, or three biggest cloud players who are all in this portfolio. That business didn't even exist 5 years ago. That's why when you look at something like Tesla Motors and you say, but why is a company like this trading at the price that it's trading at, and why shouldn't I be buying General Motors or Volkswagen, heaven help us, or Daimler, or some of the other, Toyota, some of the other motor vehicle companies? Well, of course you can, but remember what you're buying into. Some of them are going to survive. Some of them are going to be able to make that shift. Some of them won't.
Thanks, Alec. Just on Tesla, there's a from L&D. It says Sten Jacobson with Saxo predicts electric vehicle exponential growth over the next 5 years, driven by Chinese, or obviously production, you know, and obviously Tesla has reached a deal to build a factory in China to sort of take advantage of this growth. So it's just a very interesting point there from Alan.
Thanks, Alan. Yeah, that's a big point. And another big point, a big fallacy that people don't kind of get. It's a thought that the Chinese are not keen on expanding or refocusing their businesses into taking account of climate change. Anything but. In fact, the guy who doesn't believe in climate change is sitting in the United States right now. The Chinese are completely committed to it. They are refocusing many of their businesses, and they're going to be by far the biggest producer of electric vehicles into the future. That you can be sure of. They're also going hell for leather into the renewable energy field as well. Chinese are hugely understood because of myths and fake news in the West, but they really get this. And Elon Musk's deal with the Chinese in building a factory in Shanghai, and the engagement that he's having with the Chinese authorities should not be underestimated. When you look at that, and then you ask yourself, well, what about General Motors? You know, why shouldn't we be buying General? Well, General Motors aren't even in the starting stalls, and Tesla's already galloping down, hitting the home straight. Those are the realities of it. You can disagree with it. You can say, well, I think that there's better value from General Motors. I'm someone who's lived in a sector, in the media sector, where we've seen the change already. I remember when I started MoneyWeb in 1997, people thought I was absolutely stone bonkers. But rationality said to me that surely if you've got a business model that you don't have distribution costs and you don't have printing costs, which are about 80% of what it costs you to produce a newspaper, surely to goodness you can produce better content, and your better content will in the longer term prevail. That was just very simplistic, slow learning me. Of course, we had quite a lot of challenges through bandwidth, through telecom. We had one provider of bandwidth and they squeezed the bandwidth, so only dripped it out. But today you can see that that logic was sound. Look at newspaper companies. I went to the TISO Blackstar AGM last week and got the opportunity to ask Andrew Bonamore about the Times newspaper. The Times newspaper lost 1.6 billion rand in the last 10 years. Now they're closing it. Many other newspapers around the world are closing. In South Africa, there's some vanity publishing in some of the newspapers, but generally speaking, it's an industry that's in big trouble. On the other hand, the technology-driven online publishing industry is not in trouble. That's the one that's expanding. If you have a look at the most recent results from the New York Times, for instance, you'll see that their newspaper advertising is down in double figures, but their subscription revenue online is up dramatically. That's the story that we sometimes just don't get. So when you have a radical change, when you have creative destruction, remember Joseph Schumpeter, the great Austrian economist, spoke about creative destruction. When you have this creative destruction in an economy, you have this huge big blip, everything, all the rules change, so you can't start looking at investments in the way that you looked at them 5 to 10 years ago. The markets are telling us this as well. Of course, there's still those who don't agree with it. I was at a conference by the biggest money manager in the UK, Schroders, and Schroders were like many people saying that Tesla is not a share to invest in. It's the biggest short in the world. In other words, of people who have sold shares that they don't own, Tesla is the most popular of those stocks because you have money managers who do not believe that the world is changing. They still believe when they look at their balance sheets or when they look at their spreadsheets, they look at today and they underestimate the growth from a Tesla and overestimate the growth, for instance, from internal combustion engines. And they come to the conclusion that Tesla is horribly overpriced. In fact, one of the asset managers at Schroders was saying, his name is James Sim, very highly, no doubt, got a lot of money under his management. He says that Tesla is a bubble and it loses $500,000 for every car that it sells. Now that's almost like going back a few years to the old Google and saying Google is a bubble because it loses so many dollars for every search, online search that it fulfills. Or indeed saying that Amazon is a bubble because it loses so many dollars for every product that it delivers. That's not the point. The point is the investment that's being made into the future. And when it comes to understanding the future, Elon Musk is so far ahead of his competitors in the motor sector that it really isn't a contest.
Thanks, Alec. I think you've answered this. Guy Thompson wants to know, is Amazon worth buying at these levels?
Definitely, definitely. In fact, Guy, we've got a very easy, with easy equities, and I know the guys from Standard Bank are quite happy about that I mentioned this, but easy equities have started a portfolio. It's not the same portfolio as this because it excludes into the shares outside of the US, but it's one of those portfolios. It's called the exponential portfolio, and in that portfolio, I've got 25% of the holdings in Amazon, and it's only starting now, and I'm putting my own money in. So Amazon is a phenomenon. It's an unbelievable company, and sometimes you have to experience it to understand it. When you have a look at when you go to the Berkshire Hathaway AGM and you listen to what Warren Buffett has to say about Jeff Bezos, he says this man is in a different league, and he certainly is. Read the financial statements of Amazon, read the shareholders letter going back to 1997, I think it was, from Amazon, and you will see that this man just thinks differently. And the Amazon behemoth is now rolling stronger and stronger. I'm delighted to have 18% of this portfolio in it. We only started with 8%. So as Amazon's share price has grown, the portfolio has got bigger and bigger. And as I said, on that easy equities portfolio, we've got 25% as a starting point. So yes, Amazon is worth buying now.
Thanks, Alec. Benjamin wants to know, must or can I still buy Naspers and Tencent, or only Tencent?
If you have money in South Africa, South African rands, then Naspers is an excellent purchase. If you have money offshore, then Tencent is an excellent purchase. As you can see, Tencent has been a phenomenon. The one we missed, by the way, was Alibaba. I'm a little remiss there. When Alibaba listed on the New York Stock Exchange, it went up strongly and then came down, as these things tend to do when they overreact in the early stages. Subsequent to that, it's performed very well. Not quite as well as Tencent, but it has been a fabulous performer. and it would be a very, very good one to have in your portfolio from a US investment perspective. I missed out on it, but I still wouldn't be worrying about that now. And I'll tell you why. The Chinese market has got, as you know, China's got, depending on who you believe, either 1.2 or 1.6 billion people. The United States has 300 million people. That means that theoretically the Chinese market the economy should be 4 times the size of the American economy. It isn't so. It's only half the size of the American economy. So really just put your thinking cap on and say, well, unless the Chinese manage their country badly into the future, or unless the Chinese people get really lazy, they will overtake the American economy at some point in time and make up, or if they don't overtake it, they will make up that gap of 8 times, roughly, when you take it on a GDP per capita. As a consequence of that, you would expect that the stocks, the mega tech stocks in China, would be rated at a premium to the mega tech stocks in the United States. That isn't the case. In fact, they rated at a discount. That's why we brought Tencent into this portfolio. And as I say, it's one of the mistakes that I made, was overlooking Alibaba, but that's one that really should come into the portfolio as well. I don't think, however, that you should be betting on individual stocks. We never know what the future holds. The time that you start getting confident about a particular stock is the time that it's going to give you a hiding. So my suggestion is rather to get yourself a good balanced base, as we've got in this portfolio with our 10 shares here. Divide your investments among a number of shares, and then be surprised because the one that you might have been most nervous about, if it's well balanced, sometimes is the one that can perform the best. And then and other times, and you can see that's exactly what happened here. If you look at Tesla, even though I've told you why I like the stock so much, we only put $10,000 into that stock. So we only started the portfolio, if you recall, this portfolio was started with $200,000, and it's now worth $331,000. But we only put $10,000 of it in, and that was in October last year. That's a very small percentage. It's up by 60%, so it's given us 5% of the portfolio. But it's been a big surprise to us, and it's one of those bets that you can expect is going to bounce around in the short term, but in the long term, given the opportunities for a company like this, I don't believe it's going to be 5% for very much longer. I just wanted to show you this portfolio as well, and that annualized return of 39%. It just shoots all the lights out. I don't know. It was never the intention to say that we could grow at anything like that. The roughly 2 million rand that we put into the portfolio to begin with is now worth 4.5 million rand. That is partly due to the South African rand's depreciation, but also because of the stocks that we invested in performing extremely well. We've also managed to get out of some bad ones and replace them with some pretty good ones. As you can see, Tencent has been a great investment for us. It's only been around since May. Tesla has done terribly well as well, and that's only been around since October. Facebook too has been a great performer. I'm talking about those stocks outside of the main holdings. Our most recent holding, Microsoft, has already done 13% in rand terms. But that 39% annualized return on the portfolio gives you an enormous buffer, if you like, into the future. It also means that we can keep riding our winners without any concerns if a Tesla, as it did recently, it came back from 360, 380, I think it was, to around 320, where it's now trading. The rand's performance is very important to this portfolio. This is where we started off on the 4th of December. You can see right on the left-hand side, it was 11 Rand 47, and it's now bounced around. At one point in time in January 2016. You can imagine that this portfolio was looking pretty sharp because the rand was so weak. The rand has improved of late in the last few weeks, last few days, in fact, but it is generally a currency that I would be very concerned about given the underlying economy and the GDP per capita that is continuing to fall in South Africa. Of course, all bets could change in December, and I'm feeling pretty confident now that Cyril Ramaphosa will win because rationality always does prevail. But even so, it's a high risk to start betting on the rand at any time, and particularly now with with the ANC elected conference just around the corner. Individual performance, that'll help you. It shows you that the Rand, since we started off, 1127 is where it began, and it has depreciated by 22%. So if you've just taken your money and put it into the United States 3 years ago, left your Rand, converted it into dollars, today you'd be 22% up. Of course, that wouldn't be anything like the returns that we've had in this portfolio, and you can see underneath it why that is the case. The Rand, in fact, has only performed better than Microsoft and Metrobank, and both of those were bought fairly recently. All the other stock picks have worked in our favor. And there's a profit since purchase. As you can see, the wonderful performance of Amazon. Lovely to have one of those in your portfolio. It's pulled the whole portfolio ahead. And then we have Alphabet not far behind it. And there's the much maligned Tesla, has done very well for us. Apple as well has been a great performer. I want to talk a little bit about this before we go into any questions on Bitcoin. You would have, or you might have read this morning my piece on Biznews Premium about Bitcoin. There's always questions about Bitcoin, Stuart. So to almost head you off at the pass before you chat about that, I just wanted to throw these up. Here's what happened to Bitcoin in the last year. Okay, and here's what happened to the Nasdaq bubble. Is Bitcoin a bubble? Well, let's just dwell a little bit on Nasdaq. As you can see, Nasdaq is the tech stock, tech-heavy index, Nasdaq Composite Index. And I took out here from 1992 to 2002. It started only in 1991. And as you'll see, from 1991, it went, from 1971. From 1971 all the way to 1995. That's just 24 years for Nasdaq to get to its first 1,000. I hope you can see that on the graph there. Then it took, what was that, another 4 years to get to touch to 2,000, all right, the early 1998. Then it added took another year to get to 3,000. And within months, this happened, by the way, in November 98. Within months, it just went up straight, in a straight line, a little bit like South Africa's debt to GDP ratio under Jacob Zuma. Just one-way traffic, woof, right through there, and it peaked at 5,000. Now, I mentioned this story in my story this morning, that I had an associate who I got to know around about this area here, and he was a very, very successful trader. And when he saw this happening, and then indeed this part here in late 98, he went short. And he went short of the NASDAQ, and eventually he was forced to sell out around about this level, around about 4,000, 4,500, and it still went higher. So those are the problems with bubbles. Never, ever try to time a bubble or to call a bubble as a rational investor. You never know. What you do know is the bubble will burst, but you don't know when or how. And if you look at what's happened with Bitcoin, there is no question in my mind that this is another bubble. You don't go from $1,000 to nearly $10,000 in 1 year, up 10 times, without it being a bubble. Other indications of this is that every man and his dog now seems to be playing Bitcoin. There are fundamentally, there are good reasons why Bitcoin would be worth owning, but at this price, you're worried about Tesla, and you have a look at this on Bitcoin. I just want to give you one last little point about this. The greatest economist in the world in the last century was a man called John Maynard Keynes. And Keynes was, he came to speculation at quite a late age. He was in his 30s, mid-30s, when in around about 1910, 1912, he started speculating. So he was in his mid-40s, a year, 10 years later, where he saw this disaster happening in Germany. If you recall, after World War I, the Allied forces put massive reparations onto the Germans who'd lost the First World War. And as a consequence of that, they laid the ground rule for what came later with Adolf Hitler. But the new government that was elected there was called the Weimar government. And the Weimar government didn't really know what we know today about the printing of money. And it wasn't a problem for them. They had to pay all these reparations, well, they just printed more money. A little bit like Governor Gono did in Zimbabwe. He also believed, he said, well, no country's ever gone bust by printing money. Yeah. He certainly hadn't pulled out his history books. Anyway, the Weimar Republic was printing money like it was going out of fashion. John Maynard Keynes looked at this and said, this is insane. This is it's going to burst. The Deutsche Mark is going to be worthless. And he bet against it. He went short of it. He was right, of course, but his timing was wrong. He didn't know how long the bubble was going to last. And he was wiped out. The most famous economist of the 20th century got wiped out for being right, but having his timing wrong. And that's what happens in bubbles. You cannot predict them. If he couldn't predict it, he couldn't predict the end of it, then us lesser mortals have got pretty much no chance. And it's similar with Bitcoin. Is Bitcoin going to burst, the bubble going to burst today, tomorrow, next week, next year, 2 years' time? Who knows? Is it going to burst at $10,000, $20,000, $50,000? Who knows? All I can tell you, though, is that when it bursts, everyone gets hurt. And I can assure you it's going to end in tears. But whose tears and when the tears are going to happen, heaven only knows. And the future will tell us that. But if you like speculating and you've got money to lose, to burn, and you like this kind of thing, well, have a go. Why not? If that's the kind of person you are. I work too hard for my money. I don't believe in gambling and speculating. And as a consequence of that, it's just too rich for me. And I think that's the way to look at it. I saw a lot of people being hurt in the NASDAQ bubble. I saw just as many people being hurt in 1987. In fact, more people in 1987 in South Africa. And then, of course, in 2008, we had the commodities bubble in South Africa as well. And we've got another bubble going on, and that's in the debt, where you've got negative interest rates on long bonds. How the heck can that possibly be justified? But you've got the professionals who've been sucked into it. They're told that they have to put money into bonds. And as a consequence, you've got a bubble that developed there as well. I just wanted to spend a little bit of time on that. The real lesson from bubbles is know that they're a bubble, first of all. And secondly, just try and ignore when you have the newly rich investors, newly rich on paper, but don't be ugly to them. The best way to say is just, look, it's too rich for my blood. Maybe you should take half your money off the table, etc. If you feel brave, because when the bubbles continue, as happened with that acquaintance of mine when it went from 4,000 to 5,000, I can assure you, at that point he was feeling very glad that he'd got out at 4,000 or had been forced out, but he felt terribly sick a year later when it was down at half of the level that it was at. Little story about bubbles. Stu? Have we got questions, Stu? Okay, I'm not going to worry too much about that. Stuart might have had a few bandwidth problems, but let's continue in our normal... Sorry, let me just make sure that you can still hear me. Can you just raise your hand, please? Thank you very much. It's great. Okay, the hands are raised. You can hear me. It seems like the problem we've got is with Stuart, not with me. Okay, let's go through the portfolio. As soon as Stuart comes back online, he will pick up those questions, so don't worry about it. Put the questions through, and we'll just go through the rest of the portfolio. Here's the Vanguard S&P500 index. What I've done this month is gone back to our purchase date, 4th of December 2014, and here you can see it's been a bumpy ride. It was a bumpy ride for the whole of 2015, and then for part of 2016, and since then. It's just been one-way traffic. You'll see primarily that a lot of that happened from around October 2016, and you'll recall that Donald Trump was elected on the 8th of November 2016. So the Trump trade is still in place. The S&P 500 band index is a weighted index of all the shares that are listed on the New York Stock Exchange, or the top 500 shares in the New York Stock Exchange. So it gives you an indication of how that index has performed. And it doesn't really shoot any lights out, but this has been a lovely performance. And in the last year, you'll see it's gone from about 195 to where it is at the moment, about 235. So a nice return, good solid return that you're having there. Some of the better returns that we've seen in the portfolio, of course, have been through the stock selections. Here's Alphabet. And again, took a little while from January right through to June, or December right through to June, and 7 months it was doing nothing. And this is often the case in investing, that you can make an investment and you need to have patience. And thereafter, one of the reasons there, they got a new financial director who just adjusted slightly their spending into a way that was more Wall Street friendly. And as you've seen, the share price of Alphabet has gone over 1,000. Here's the all-time star, the hero, Jeff Bezos, and that share that we bought in the mid 300s, as you can see, it actually cracked 1,200 in the past week. And I don't think it stopped there, not by any means. Berkshire Hathaway, even it has had a good run lately, benefiting from the Trump trade. So if you see from October, the whole stock market's gone up. But again, if you were to use a scale and put that next to some of the big movers like Amazon and Alphabet or the old Google, you'll see that the percentage-wise, it hasn't performed anything like as well. Apple, well, this has been a great winner for us. Apple's results that came out in the last quarter, and you can see that bump up from October to November. The results were exceptional. They were way ahead of target, and the new iPhone X is getting every
Hi, Alex. Alex, are you still there? Hi all. It seems as though we've lost Alec. I'm just going to give him about 5 minutes to come back online again. Sorry for the inconvenience caused. So I'm just waiting for him or Stuart to get back to us.
Might you want to come along at 2 o'clock?
Alec?
Hi, Lindsay. Sorry, I'm not sure what's going on today. We've just lost Alec now. I've just managed to get back in. It's like we're getting kicked out of the webinar, so I'm not sure. I'm just chatting to Alec on Slack to try to get him back online.
Sure, I've asked the clients just to wait.
Yeah, sorry, it's just frustrating, I'm sure.
5 minutes.
Excellent, because I see his presentation is still live, so I'm not sure where he's. Let's see.
Hi, I'm back. I don't know what went on. Stuart, are you back as well?
Hi, Alec. Yes, I'm back. We've been attacked by someone. We've both been kicked out here, but yeah.
Okay, Stuart, that's great. All right, I do apologize for that. It does appear to be a little bit of a problem, I lost you first, Stuart, and then did you lose me afterwards, presumably?
Yeah, I lost complete sort of connection here. So not a mouse, just with this GoToWebinar system. So I just had to log in, out, and back in again. But yeah, all looks good now. I'm not sure where you got up to, but we crack on, try to get going.
Well, why don't you, let's just pick up on the questions, because I guess that's the more interesting things. Sorry, I see the 38 questions there. So try and work through them as quickly as we can.
Perfect. There's a question on IBM, Alec. One of the users still has IBM in his portfolio. He's not sure whether he should sell.
I'm not following IBM anymore, so please do, unless you are going to be looking after it yourself. The whole idea of this portfolio is that you've usually got a day job, or most people have got day jobs, and it's my job to keep an eye on these stocks. I'm not following IBM anymore. Warren Buffett has sold out of the stock, and for him, after many years and a huge holding that he had, if he decided to get out of it, it was good enough for me. So it had disappointed. It had not been a good performer for us. So that was why we're out of it. So, but unless you're prepared to follow it yourself, just know that I'm not going to be.
Thanks, Alec. Gerard Cook just says he's got 1 million rand to invest. How should he spread it in WebTrader?
I would say if you're looking to invest it offshore, you can spread it amongst these shares. Correct? No problem. That's really the whole intention. If it's the 1 million rand you want to invest offshore, my suggestion would be to allocate it according to the proportions that we've got in this portfolio, and that will, at the very least, you've got somebody looking after or looking into the shares for you, and somebody who'll report back on them every month. And that's what this webinar is about.
Thanks, Alec. Len says his son-in-law has just opened an account at Metro, and he says it's great service. He's very happy. There's some commentary there.
Thank you.
There's just William Murray. He doesn't say what. He just says, please comment on Tesla and Facebook. I know you've done a lot of Tesla commentary. I'm not sure Facebook.
Well, Facebook is, it also came out with financial results in the past quarter that were better than expected. It's just, in this new world, what you have to try and do, and please, it is a new world. The internet is an invention that has changed mankind and changed reality as we knew it. It's brought in exponentiality. Companies can now buy and sell products through the ether. It really is a new world. I know we've heard it time and time again. In 1929, they said it's a new era. In 1987, they said it was a new era. In 2008, they said it was a new era. Those were all to explain away dislocations in valuations. To me, this is a new era because the internet really does change everything. So that's the premise I come from. But then remember, I invested heavily in the internet from a personal and from a professional perspective right back in 1997. So that's where it starts. But in this era, in the new technology era where different processes come to play, the fourth industrial revolution, as they call it at the World Economic Forum, you've got to look for the gorillas because the gorillas win in this game. You will be surprised to hear that of all online advertising in the United States, 2/3 go to just two companies, Facebook and Google. Now, that's extraordinary when you consider that there are many, many players. In fact, you can be an online internet player tomorrow if you want to start a website to compete with them. But 2/3 of the advertising go to those two companies. Facebook is one of them. It's a gorilla. The social networking vehicle that Facebook has put together is the gorilla in that space. Social networking is, for better or worse, becoming ever increasing in our lives, and you've got to have a slice of that action. So it generates between 35 and 38% profit margins. It has a new world kind of approach of relatively few people. It's trying to do a lot of good, and it has a social license because you don't have to go onto Facebook. Doesn't cost you anything, but If you don't want to go or join that network, you don't have to. It is the one to join. There is an alternative in China, and of course we do, being very focused on the Western side, we do sometimes forget that there are other alternatives around. But as things are going right now, Facebook is still growing, and there's nothing that I can see on the horizon just yet that is existentially problematic for it. So Facebook's in our portfolio.
Thanks, Alec. Follow-up comment on Metro Bank. Harry says, it hasn't moved like your other holdings. What are your thoughts on selling Metro and adding proceeds to, say, Tencent or one of the others in the portfolio?
Yeah, Metro is an interesting one. Metro is a different play. I bought Metro because it's almost like Capitec in South Africa. And we've had the advantage in South Africa of watching the way that Capitec's continued growth year on year, the way that it adds customers all the time, the way that it expands its balance sheet at exponential rates, is translating, has translated into a share price that today everybody looks back and says, well, of course, I always knew Capitec was going to be a big hero. The thing is, Metro Bank is going through the early stages of Capitec. It's growing at 30% a year, 60% a year. It's expanding rapidly. It's in a market where it is chewing up the competitors. I've actually just moved my account across from HSBC, our business account, from HSBC to Metro Bank, and I've been absolutely delighted with the way that this business operates. It has, there's on the screen, I met the founder, and the founder is Vernon Hill, has done this before. He did it in the United States. He started a company in the United States called Commerce Bank from one branch when he was a 26-year-old. He built it up into 500 branches, sold it for billions of dollars, and then he retired, as he says, for exactly 1 week. And after that week, he said, somebody has told him that, America is a competitive area. The UK, on the other hand, has got a 5-bank cartel, an opportunity that knocked only once, and he didn't need to wait for it. So Metro Bank's in the early stages of formation. It's around 7 years old. I don't know when the market's going to pick up on this one. I have no idea when the Capitec effect is going to start coming through here. But the reason why Metro Bank's share price has not reflected the growth is because the British investors, or the big investors, it's a much smaller pool of capital than in the United States. They are mindful that at this rate of growth, you need to keep adding capital. So Metro Bank will be coming back and having successive rights issues to raise more capital. So that's the theory. Of course, there are other ways of raising capital. There are preference shares and other kinds of things. But up to this point, what Metro Bank has done is it's issued more shares through rights issues. When I spoke to Vernon Hill about this, he said, you've been in London too long. You don't actually know how this thing works. Because I said to him that was my understanding, that the share price was not being supported by institutions, or they weren't buying into the story because they were going to be fighting against themselves, because they'll have a rights issue at if they buy the shares now, they push the share price up, they'll only be able to buy the shares at a more expensive level in future. And he said no, he doesn't buy that story. And he said, and I'm with him, but we're going through that hiatus right now where you've got a little bit of a boxing match, if you like, between the investment community and the bank itself. The underlying business, though, is spectacular, and that's the one that I like to be in. Spectacular, exponential businesses, and this is one.
Thanks, Alec. Steve says Berkshire's underperformed Amazon by a factor of 10 over the same period. Is it time to disinvest and buy elsewhere?
Sorry, what is underperformed Amazon?
Berkshire Hathaway.
Yeah, Berkshire. It's you might have noticed, if you've been with us for a long time, that we have halved the holding in Berkshire. Is it time to disinvest? Well, when we find something like this, like Tencent Holdings, and Alibaba's looking around the corner, then that is the time that we will take money out of, and I'm going to show you the portfolio again, there it is, out of Vanguard and Berkshire, and reallocate that into a stock pick that we like even more. So it's a very valid point. My problem with this, the one thing I would have been happier to invest in Alibaba than Berkshire, of course, because the performance is so much better. But Berkshire's done okay. It's generated a return for us in rands of 48% in the 3 years. And Berkshire and Vanguard, in other words, the index as a whole, they are there almost like a parking spot for your rands until such time as a better opportunity comes along. And I can assure you, I'm looking, and I keep looking, and sometimes they run away from you, these share prices. Sometimes you're not quite sure about the investment opportunity. We did look at Lloyd's Bank, you might remember, some time ago, and we were quite keen on that one, and fortunately didn't pursue it. Went rather with Metro Bank, which has also underperformed, but I'm much happier to be in Metro than in Lloyd's right now. But both Berkshire and Vanguard are sitting there as, if you like, almost like our cash, that we will turn it into cash when a more appealing opportunity comes along. And there's lots of them. You just have to be comfortable that it's a kind of stock you can put into your portfolio and hold for the next 5 years.
Thanks, Alec. I see, Maureen, I'm not sure if you've got any insight on Mimecast.
No, sorry, not a company I know at all.
And just two pieces of commentary. Andrew says, can we blame Telkom and short them? I suppose not, because I'm not on Telkom, and I know you're not on Telkom, so it's not their fault.
No, mine would be Virgin Media, who've got this unbelievable 250 megabyte fiber into our home. But I guess Virgin Media, I don't know what happened there. I apologize. Don't short Telkom on certainly not on what happened today.
There's just apparently Bitcoin has just broken through $10,000 according to Shane. And then
I hope you got lots of them, Shane, and I hope you can take your profit one day. But please don't take it on my say-so, because the problem about bubbles, and just going back there again, look at that. Whoa. So you've gone up 10 times. In fact, no, 20 times this year, because it was at $500. Well, good luck to those who've made their money. It's like when I was a young man, I used to go to the horse races every weekend because the student loan was greater. The student loan and my rental repayment was higher than my salary that I was earning, after-tax salary. And as a consequence, I had to somehow make ends meet. And the way that I did that would go to the races and find the placed bets on horses that really looked, after a lot of studying, it looked like they would make a good return. And one day, I remember it so well, I made a mistake and put the wrong numbers in, and it was a 50-to-1 shot, and it was a win bet as well. A 50-to-1 shot won the one leg, and a 20-to-1 shot won the next leg. And I've never seen so much money in my life. I think the people who invested in Bitcoin must be feeling a little bit like that day. But it didn't fool me into thinking that it was something that I knew much about. It was really just dumb luck.
Thanks. I've got a final question from Gerald. He just wants to know if you've used the Standard Bank's Shift app and your thoughts.
It's amazing. It's a fantastic app. I don't need it because I live in the UK, but for a South African, it definitely is a wonderful way of moving money around. And it's the Standard Bank's doing some pretty good stuff, and that's one of the very, very good innovations that you can get from the bank. Well, Stuart, I see you saying that because we're coming to the end of our time. Maybe we can give it just another 3 or 4 minutes. I said there's still lots of questions coming through. Let's try and answer a couple more before we log off for today.
Thanks, Alec. Question from Stephen. He says, are there any shares in the portfolio that you wouldn't buy now due to the growth they've already experienced since the inception of the portfolio?
Stephen, that's a very good question. And it's one that you always consider when you look at the portfolio every month. In all honesty, no. There's no stock here that I would not be happy to acquire in the proportions that we've got in the portfolio at this level, if you said to me, would you go and put 100% of your investment today in Tesla, given all the wind that's gone on to Tesla from the front, given the way that the market is so heavily short of Tesla, I'd have to say to put 100% into Tesla right now is not a very smart move. But to have 5%, absolutely. Because it's one of those things that is just going to surprise you. Certainly, every other stock that in the portfolio, Amazon, I'm very happy at 18%. It's the best company in the world, and it's the company that I think in 5 years' time, if you close down the stock markets today, in 5 years, I would put a very significant bet on Amazon being worth more in 5 years' time than it is worth today, a lot more. And in fact, growing by a rate which is faster than any of the other stocks in this portfolio. Google is another company. It's a gorilla in its field. Remember, Google is giving you the information for free. It's using your data, and it's taking that data and it's applying it in very smart ways. But you aren't paying anything for that amazing service that Gmail and search gives you. Apple. The Apple X, I suppose Apple's got to be the more vulnerable of them, but it has been moving quite aggressively into new fields. It's got a lot of cash. Last I looked, $250 billion in cash. It pays lots of tax. Biggest taxpayer in the world, paid $35 billion in tax in the last 3 years. Would I be happy? Absolutely. Tencent Holdings, same thing. You have 10% in Tencent. Numbers add up quite nicely, but remember, Tencent's got 900 million Chinese who use Tencent as their operating system on their phone. Facebook, we've discussed as well. Vanguard is really 8% in the index overall. You can't find a better place to park your money. Microsoft, I love because of the way that Office 365 is transforming that business. The whole business model has changed. Metro Bank, we spoke about a moment ago. Berkshire, again, a nice parking place. And Tesla's a bet on the future. And it's not excessive at only 5% of the portfolio. So no, happy with all of them.
Thanks, Alec. We've managed to get through all the questions, so I think it's unfortunately time to say goodbye.
Indeed it is. Thank you for being with us. Our apologies for the break in transmission. Do know that we will have the portfolio webinar transcribed and up on Biznews Premium for your leisure. We go back to that at some time in the future. And from my side here in London, where the sun is shining, even though it is only 6 degrees, it's always a pleasure to be with you, and thank you for joining us today.